Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Thursday, June 9th. My name is Todd Rich. I am with Nadex. With me from Keep Trading Simple, the CEO of Keep Trading Simple, Brian Caprice. What are we looking at today? Just quickly, one, we are certainly going to be talking about energy. Yesterday, we did a discussion and some trade ideas and setups around, or technical analysis and setups around oil with its with the oil inventory report. God, I couldn't. My brain was froze there for a second. With the oil inventory report, and it was also at 10:30. That was yesterday. We had an interesting movement in oil. Brian's going to go to the chart. We could take a look at what oil has done since then. It is punching higher, hovering up in that 122 per barrel range. Today we have the Nat Gas Inventory Report. So again, looking at a setup going into that report. And it's also at 10:30, which we know tends to be often reversal times. Nat Gas trading much lower today, so Nat Gas very volatile. The other news was the European Central Bank. We told you that was going to come out before we started today. They are going to move off of zero. They announced their intentions to raise their interest rate to 25 basis points. So we've got some activity in the euro, and we'll be going through those euro charts because in the different currencies there are some movements with the euro. And then to wrap things up, we will talk about equities. There is certainly some volatility there, and we can take a look at some technical levels there. Before I flip it over and we get into some of those headlines and then take a look at those charts, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And oh, you know what? I'm not. I'm just going to let Brian go through this. I mean, I know he's going to start with crude oil, then we'll jump to nat gas before we get over and take a look at the euro. Brian, I'm just going to go ahead and flip it over to you and let you
Sure.
start going.
Yeah, I mean, yesterday we knew we had the oil inventory report coming in. I had it set up and then I moved it. I was like, oh, I don't need this, but then I did need it. It's one of those days. Yesterday, again, we were expecting somewhat of a kind of similar situation. Remember, the API report was coming in at -1 and it came in at +1. It was -1.8 and it came in at +1.8. This was pretty close, where it came in as a -2.6 and came in at 2.0. It was really the turning point yesterday, and I mentioned definitely go down to the 35 and 1 strategy that we've covered. Here was the 35 and 1 strategy with a confirmed area. And I said that, hey, listen, there's some other factors as well. This zone that we had formed yesterday was actually right around the 50% retracement level as well. So an easy overnight low to high, 50% retracement, 35 and 1 strategy, basing confirmed, came right down. And again, it did its pause right beforehand. But if not, if you missed it, if you didn't take that as a pause, it still came down when oil came out and then just absolutely just exploded higher. So I mean, it blew through its 1 to 3, and you can see it went from all the way from 119.50 all the way up to what 123.20. So absolutely monster movement there over in oil yesterday. And right now we're kind of holding firm. From its peak, it's kind of pulled back a little bit. Question is, will we continue to deteriorate today? Obviously, we knew we had the comments from the ECB today, so I would say most likely now that the news is out, they knew that there was a surplus there. Today, there probably will be a little bit more of a pullback. The Ukraine war is kind of heating up right now, but again, we're getting prices right now globally. Here you go. Here's the guard speaking right now, basically just a couple minutes ago. The global energy prices are to stay higher in the near term. Prices rising, becoming more widespread across. Wage growth is increasing. Initial signs of inflation expectations above target monitoring. The war is a big downside risk of growth. Again, typically is, right? It's funny. War is a downside to their growth now, but then when you look at the defense industry, that typically tends to be what stimulates economies in a crazy way. So it's kind of funny how that she's mentioning this. But again, her just acknowledging that energy prices are going to stay high in the near term. I think it's important to bring up, just for the fact that, remember, they want to just block all Russian oil and say, listen, we don't want your oil. Your oil is dirty oil. That's a situation we haven't really necessarily seen where there's a commodity that everybody needs, but you don't want certain barrels from certain places, and it's not like the entire world is going to suddenly say, you know what, you're right, let's just not buy Russian oil. Um, there are plenty of people that will buy it. So this is an interesting story, but I do think it continues to drop down today. Is there a great entry right now? Again, I would like to see what happens with a typical, any type of move here. I'll take this and move this over. When you see this type of a big burst, that is kind of the first thing you're thinking about is like kind of a parabolic retracement move. With this kind of basing level right here, I would say that if we do get a breakdown below, where is it, price table? 121.32. There is the potential that it could push back a little bit. Remember, everybody's talking about, listen, it's high, it's high, it's high, it's high. But some of the data we got this morning is actually not justifying a continued movement. What I mean by that is, let me pull this down. Here, unemployment going up. Now we know the jobs are, we had more jobs and more people were getting hired, but now we're starting to see the opposite side of the equation and the unemployment claims. And that is the most recent. So people are looking at this and saying, well, wait a second, are more people starting to lose their jobs now? Are we starting to cut back? Do we need to start getting concerned? Because we have seen some worrying things out there. So, I think it's important to bring up. There's a lot of different factors to it. But yesterday, really, I would say today versus yesterday, it's kind of a retracement. We're seeing the yen retrace. We had massive movements in oil. Again, that profit taking will come back in and start pushing it lower. So it's there. Natural gas, again, huge movement up. But then yesterday around noon, 1 o'clock ish, it took a major hit down and dropped all the way from 960 all the way down to 810. So again, massive movement right there. What will happen with this one? I mean, it's run into areas where we have had buyers. If I bring this across, you can see we're kind of bouncing through and we have some, higher buyers there. There will be people who are trying to run fibs on this one. And again, we're at the 23.6, and that could be why, at 8 o'clock in the morning, it's starting to pull back down again because the markets aren't really, crazy live at this point. But I think another area too, and again, we do have a little bit of a test sitting right there. If this rallies back up, I think it could have a difficult time at $8.89. Now, I was so close. I was like, we got to get to 10. We got to get to 10, and we got within 35 cents. And then we took this major hit. I'm going to have to say that at this point, it would take a lot for this to really get back up to 10 for this week. So is 10 off the cards? No, I still think somebody wants to pay $10 for it. But with this major of a hit, I mean, this hit over here was one crazy day before. This is a much crazier of a day. You can see it's twice as big as the our original first crazy day. So it just shows you that how what the potential of natural gas is right now, how much it can move. All the commodities are again in the red. Gold also kind of bouncing back, and we talked about the channeling. Again, we wanted this to kind of go higher for preparation for tomorrow's CPI. It's already starting to rally back down again. Silver also starting to kind of push back down again. So all the commodities are in the red. Again, they're associated more with risk. The cryptos are kind of flat. They're not really telling us a whole lot right now. Doji's up, but Bitcoin is down. Ethereum is barely holding on for a positive gain of 0.09. So not much going on there. Interesting enough, I did want to bring it up too. It's interesting to hear. I got, I get I mentioned yesterday. I get the Yahoo Finance articles. They're talking about Exxon. I don't know if anybody's looked at Exxon or what Exxon has done, but they basically say that Exxon just hit another high. It's the first high they've hit in 8 years, like a new all-time high. But the only problem is that the Dow is not experiencing any of the gains because remember, Exxon got kicked out of the Dow. And what was the article? Hold on. It's absolutely hysterical. It's up 70% this year, 71% this year since it got kicked out and it got put in Salesforce and Honeywell got put in. They both are obviously not doing anything. The Dow is, I'm sorry. It's up.
It's, while you're looking,
157%, 157% since it got kicked out.
They're benefiting. All the oil companies are benefiting greatly from this crazy pricing of oil because they're making truckloads of money. And you mentioned it yesterday. Yes, they're making all this money, and instead of taking that money and investing it back into their business to grow, they're not, because we know that globally we are actually looking to try to move away from fossil fuels. So it's moving and investing. And so instead of taking that money and investing back into fossil fuels, which we know we need it now, but they're not going to be here.
I mean, future thing.
Yeah, for 50 years from now, they won't be around. But right now, they're going to be making money hand over fist. The question is,
and it was the same thing in 2008 in the housing bubble.
Yeah. Do we invest in
more
the
money
stuff
than anybody
that's going to help us? Right. And
Yeah.
We need to invest in all the other. If we're going to replace fossil fuels, we need to have the true investment to replace the energy when we need it. I mean, we need energy. There's no
And
way around that.
yeah. I mean, and you want to see a chart that just goes crazy. I mean, look at this. I mean, when it was down here, it's like, oh, it got removed back in 2015. Like, oh no, it's bad, it's bad, it's bad at 33, and now look at it. I mean, it's all the way up here at
Yeah.
104 and just surging. So it just goes to show you that, it's interesting how you see who's profiting, you see the subsidies, and you see kind of what's happening out there in the markets, and it's like this is why it's important to understand actual, intraday more or less trading, right? Because you know. Even the Dow was like, nah, it's bad. Get rid of it. And the things that they all put in are doing horrible compared to this one. If they would have done absolutely nothing, the Dow would be, much better off than it actually is. So it's just amazing how some of these things go. But overall today, VIX is considered up. I don't need it on a daily basis. I can drop it back down again. It is technically up from where we closed. I wouldn't say there's any major news out there, but everything is in the red right now. And as I said, when you see all the commodities off, it kind of looks more like it's a risk-off day. I'm actually curious to see what bonds are doing. And bonds are holding a little bit lower as well. So it's one of those things. There's a lot of negative sentiment out there right now. The dollar, again, has been whipsawing back and forth, so not too much there. But as far as the indices go, you can see the indices like, wait a second, why did this shoot to the downside? It's some of the comments that were being made, as well as, again, the unemployment claims number that came in. Again, you may say, well, why is the ES going down suddenly at 745? Well, that's Lagarde speaking. And again, she's speaking about global energy prices and the, I mean, again, when the ECB is saying, hey, they're going to remain high for a while, at least in the near term, and probably longer than that. And it's spread across a number. Price rises are becoming more widespread across sectors. So again, you may say, what does that have to do with us? Well, again, Europe, a lot of companies do business with Europe. If they're seeing price rises across not just, and again, this is where I would say that this is probably her single biggest point that she's mentioning today. Yes, we all know global energy prices are high, but price rises becoming more widespread across sectors, many sectors out there. That's kind of where you're like, wait a second. So the inflation is spreading; it's getting worse. And again, Todd and I were mentioning this too. June is a very, very big month for kind of where we're seeing the biggest problems right now. We know that we have food inflation. We know that we have energies inflation. Well, this is the month that the Ukraine is supposed to harvest all their grain. Okay,
Right, we're able to.
they cannot get the grain out. So it's kind of one of those. You know, they have a lot of it. They have 40% of the world's sunflower oil. They can't get it out. So if they harvest it, which they have to, they just can't let it go on the fields. But if they harvest it and put it into storage, they can't get it out. So it's one of those things that, again, we haven't even seen, and I keep mentioning it, we haven't seen the worst of food inflation yet. And the fact that she's saying, hey, listen, the price is spreading. Inflation is getting, it's going everywhere right now. Again, that has probably got all the indices right now in kind of pucker mode where these are all dropping to the downside. So, right now, we mentioned it yesterday. I put this kind of as a low at 70.76. You're seeing a drive down now. Could it magically get positive at the open? Sure, it could, because there's so much negative sentiment right now. We are under all the Globex lows. And again, remember what I keep saying. This is that trap for retail traders. Oh my God, it breaks below the low. It's red. That's it. Sell it. So there is going to be a bit of a trap here, probably at the open. But overall, the sentiment is kind of negative, and unemployment rate, or the unemployment claims number, getting higher is not the direction we wanted to see. So again, that is kind of a negative factor. But she is, Lagarde is, inflationary pressures have broadened and they've intensified. The Russian invasion will weigh on confidence and dampen growth. I mean, all these things. Yeah, I got it. The war, the pandemic in China made supply bottlenecks worse. And again, we're not necessarily here, but not as much in the United States. But I don't think we've seen the full run of that either. So right now, I have to say, more kind of negative feeling with this. NQ looks exactly the same. The huge drop down starting at 745. We'd kind of marked that level off as well, especially chopping through the 61.8. We're like, yeah, there's something going on over there. It did. It pushed lower, and I would say, really downside targets for me on this one is 12,428. But kind of the same thing. That Globex low is right there, and we're bouncing right below it and basing. And this is where people are like, hey, it dropped it short. If everybody's trying to short, there's got to be someone on the other side of the trade. It's probably big money to take advantage of this parabolic move. YM, exactly the same. And we talked about this, but again, 1, 2, 3. It is number 4, so it's kind of like, oh, do we take that one through? I'd be very curious to see. This is one of those ones that it is almost kind of like a support and resistance based trade. You'll see the people coming in saying, oh, there's support down there, right? If it breaks below, yeah, it's a pivot low. Yes, it is. It's also an area where we've had buyers, and from the establishment, 1, 2, 3 basing in here. This could give us a Harry Potter. And remember, we're looking for a drop down, some type of a pausing base, and a pullback, and then we'd look for a continued push. Now, again, this one may drop really, really fast. Again, seeing when you hear all sectors, that's where manufacturing starts jumping in. And I would say potential lows today are probably down here at 32.61. Again, not how you want to go into a Friday with a large CPI number. And then Russell's kind of in the middle pack, but it looks almost exactly the same. And this one actually may have been, yeah, it's a 61.8 pullback as well. So you can see that it came up and paused and tried at the 50, went up to the 61 again. I'm just running it from the top here down to the bottom. This kind of more recent trend. Take this one off. Just put it over here so you guys can see it. Again, like a 7 o'clock and then 7:45 just absolutely got hammered down. I would say the lows for the Russell today are probably could be down here at 1871. The big piece of this again is we go super negative today. You may say, well, what's happening with tomorrow? They have not changed the forecast yet. It is still considered 0.7% up. Lagarde's kind of confirming that. So the question is, will the market factor it all in today in preparation for tomorrow? Will we see a big 0.7 number and then the markets all go straight up in the air? Potentially. It depends on how much the market sees it today and says, hey, listen, this is going to be bad. Let's drive it down right now so we can trap people, so people that go short tomorrow before CPI get in trouble. But right now, I'd really start focusing on, again, what does the morning action look like? Drop your 15-minute chart, see if there's any pullbacks, look for 1030 reversals, and then look to see in the next 12 hours where the market is preparing for that CPI number. Because I'll tell you right now, even if it comes in as a forecasted 0.7, that is showing us right there. That is proof. I don't care about the year over year because last year we were not raising interest rates. Now we're raising and we're getting ready to do it again. It's starting to accelerate from 0.3 to 0.7, showing that we have not peaked. It is going higher again. All the feel good stuff that we talked about before. And God, imagine if this comes in at a 0.8 or 0.9. I'm hoping it comes
Yep.
in at a 0.5. That's still an acceleration and still bad. But again, a 0.5 is better than a 0.7. And just the question is, this broadening, seeing inflationary pressures across the board, again, it makes you really, kind of wonder. And again, inflation at a 40-year high, new mortgages down, at a 22-year low. Those are not great recipes for the overall economy. So,
Yep.
that's it.
All right. Well, with that, any questions for Nadex, please email us customerservice@nadex.com. Customer service we're here to help. Now, Brian and I are also accessible. We are also here to help, and we do answer our own emails. If you got any questions for Brian, please feel free to reach out to him. Brian is a fantastic coach. Support@keeptradingsimple.com. Please feel free to reach out to Brian directly. I am also available. You can email me at todd.rich@nadex.com. A very quick recap on what we were looking at today. Oil clearly on the move following yesterday's inventory report. We saw a punch higher. We're up at 122 a barrel. Nat Gas completely sold off yesterday, but we've got that inventory report this morning at 10:30. Be sure to be looking around at that. We had the ECB announce that they're going to start hiking interest rates. They're coming off of zero. We're seeing some movement in the euro and equities, which were trying to climb higher, completely turned over and completely turned over. Now we're looking to have a red open. I did see the last question. We do these every morning. We go for about 15 minutes. We're going a little bit longer today. Please come join us every morning. Brian and I, we love doing this. If you can't catch them live, we do record them. They're available on the Nadex YouTube channel. You can go back and listen to any of the old ones we've done for the past year. They're all still up there. If you like what we're doing, please give us a like on Facebook or YouTube or however you're catching us. We do appreciate that. Brian and I will be back tomorrow morning. Remember, tomorrow morning, right before we go live, CPI. We are going to get a look at that inflation number for the U.S. It is a big number. We'll see what we've got in store for tomorrow. We'll be doing some analysis then. Until then, hopefully we catch you tomorrow. But until then, good luck in the markets, everyone. Thank you so much for joining.